Hello everyone, welcome back to Vinayak Y U Academy. This is Prelims Hacks topic of the day series. In today, we will be discussing 50 years of Indian microfinance sector. Since Indian microfinance sector has completed 50 years, the related questions become very important from UPSC prelims. Okay. Self-Employed Women's Association Bank, that is SEWA Bank, was India's first microfinance institution, which was established in 1974, has completed 50 years. Okay. So, what is microfinance? Microfinance provides financial services like small loans to the marginalized individuals who lack access to formal banking services. Marginalized individuals can be women, can be SC/ST, can be OBC, or any minorities, etc., who doesn't have direct access to the banking. Microfinance loans are typically collateral free and offered to low income households defined by the RBI as those with an annual income of up to 3 lakh. Okay. So these are criteria which are considered for providing the loan or finances under microfinance. Microfinance institutions usually charge higher interest rates compared to the commercial banks due to the risk associated with lending to underserved communities. Okay, since there is a higher risk and there is also no collateral, they are charged higher compared to commercial banks. The interest rate is higher compared to commercial banks. About the global background, this self-help group or microfinance institutions started not in India but in our neighborhood country, that is Bangladesh. Muhammad Yunus, present Nobel laureate, laid the foundation for modern microfinance institutions with the establishment of Grameen banks in Bangladesh in 1976. And about the regulation of microfinance institutions in India, the Reserve Bank of India is the regulatory body for MFIs operating in India. The Malegaon Committee recommended a framework to regulate non-banking financial institutions or corporations, MFIs, to ensure transparency, borrower protection, and the financial sustainability of the institutions. Okay, within these NBFCs, there are different types of NBFCs. Under non-banking financial corporations, one is the microfinance institutions, which is regulated by the RBI. Then, initiatives by the government for microfinance in India. First is Pradhan Mantri Mudra Yojana. Under PM Mudra Yojana, provides loans up to 10 lakh rupees to non-corporate, non-farm, small and micro enterprises through commercial banks, NBFCs, etc. Okay, so that finance is available for the smaller enterprises, so that with that investment they can provide more profit as well as contribute to the economy as well as contributing to the employment as well. Then loans under Mudra are categorized into Shishu, Kishore and Tarun categories. The 2024 Union Budget enhanced the limit for Tarun Plus category to 20 lakh for borrowers who have successfully repaid previous loans under the Tarun category. Okay, so highest is the Tarun category. If you already repaid under the Tarun category, then you are eligible for Tarun Plus, and the highest amount under Tarun Plus is 20 lakh rupees. Okay, then recognition of self-regulatory organizations. In 2014, the RBI recognized the Microfinance Institutions Network, that is MFIN, and Sadhan as SROs, that is self-regulatory organizations, to ensure standardization and self-regulation in the microfinance sector. Okay, so that these microfinance institutions can work in higher autonomy. With higher autonomy, they can innovate and venture into riskier activities. Okay, riskier areas. Then harmonized regulations. RBI introduced harmonized regulations for all regulated entities involved in microfinance to ensure uniformity in lending practices as well as borrower protection. Then SHG, Bank Linkage Program of 1992, It was initiated by the NABARD. This program is one of the largest microfinance schemes globally, which is aimed at providing financial services to underserved households. Okay. In SSG or self-help group, members jointly take the responsibility for the loans, which are often provided for income generating activities like smaller industries in the households. Okay. Regional rural banks and scheduled commercial banks support SSDs under this program as well. Okay. Then, so that is about microfinance institutions and the 50 years of microfinance institutions and the various schemes taken by the government to promote microfinance institutions and financial inclusion in India. So this ends our discussion for the day. Jai Hind.